Hi guys, welcome to Chapter 8 Problems P2 video. And in this assignment, there's 3 questions. They're very similar. They're dealing with Schedule K1s. Unfortunately, they don't actually show us the K1s, but we're just going to take the information and apply how it would be reported for the owners on their Schedule K1. And we're going to choose which form. They give you some forms and ask you to report what will be there. I'm going to start with the second problem because it's actually a little bit more basic. So married taxpayers filing joint or equal owners in an S Corp corporation. The company reports sales revenue of $420,000 and expenses of $315,000. They also earned $22,000 in taxable interest and dividend income and had $15,000 of investment interest. So they're just asking for tax purposes for the owners on their individual taxes, where are these amounts reported, right? And what amount ends up being reported, so we can see for Schedule E, that's going to be the pass-through income, revenue $420, expenses $315, and so it's going to be net income of $105 reported on each schedule. Interest and dividends on Schedule B, which they gave us, $22,000, and Schedule A, $15,400 of investment interest. So they just want you to realize that you can deduct investment interest on Schedule A up to the amount of investment income reported on Schedule B. And so which would be unlikely for your investment expenses, not your investment amount, but your investment expenses. Even this is incredibly high. It's a very rare situation where the investment expenses, although when you're dealing with lots of money and lots of investments, it's certainly possible. It's definitely a very kind of someone with a lot of activity that takes that type of a lot of investment activity that would take that type of deduction. All right, so that's number 1. You will have different numbers, but primarily the same concepts. 3 equal partners in a local restaurant. The restaurant reports the following items: revenue, business expenses, investment expenses, short-term capital gains, short-term capital losses. So first, we have Schedule E, which will, of course, last we have Schedule E, but I think it's easiest to deal with first. That's going to be 640 minus 330 for net business income of 310. And then you're actually going to allocate it for the owner, so 30% or 1/3, 33.333%, 103,333 on Schedule E. Then we have Schedule A. So again, that's going to be those investment expenses, and we're just going to take 30% on Schedule A. We can see Schedule D, since we don't really have the investment interest in that case, we can't really apply that rule. Not very consistent of them. But regardless, last one, Schedule D, capital gains, short-term capital gains, and short-term capital losses. So we can see here our capital gain, 205, minus our capital losses ends at a loss of 64,700. Now, we know that individuals can only deduct 3,000 capital loss, but in this case, it's short term, so it's just going to go into the netting process for that individual. That's why it's called a flow through. So we don't apply any of those limitations. Instead, we would just take their percentage and report it on Schedule D, 21,576. And the last problem, number 3, is also similar. 50% partners in a partnership. Business operates business revenue, expenses, investment expenses, short-term capital gains, and short-term capital losses. So how are they reported? This one is essentially the exact same of what we just covered. Okay, That is all for Chapter 8 problems too. Let me know if you have questions or post in the forum. Bye.